welcome, Chris.
Thank you. Is this on? Can you guys hear me? Are we ready to go, people? The anchor leg here, right? Yes. So you guys are tired and I'm over caffeinated. So I think that's probably a bad mix. But anyway, we'll take you home or one of the last presentations. I'm going to talk about real-time payments as an enabler for real-time treasury. And we'll talk about what that means. But just a little bit of background on who I am and who I work for. So I can't help you with your mortgage payment or your bill payment or your credit card. I work on the wholesale side of Citibank, Citi Treasury and Trade Solutions. Some of you may have heard of it, but it is probably the leading global bank in the treasury management space. So we're in, as you can see, 100 plus countries, cross-border to 160 countries. But the real box that I'll focus you on, given the topic, is the middle upper area. We've been doing real-time payments for many years in multiple markets. So between SEPA and all the local countries we're in, we cover 60 plus geographies. I think the number that we're doing officially is about 8 million real-time payments a day around the world. I think it's probably closer to 10. And we continue to expand that footprint. So this is a huge strategic priority for us, and as importantly for our clients, and many of those are corporate treasurers. I run North America Instant Payments for the bank. So I'll touch on a few trends. I think we hit on a bunch of these themes, so I may skip through the intro slides, but obviously a huge amount of change going on in the world in different segments. We talk a lot about shifting business models. The new generation of people who have grown up with Uber and with Venmo and moving into the workforce, so consumerization and what their expectations are for how they do business. That's inclusive of Treasury. And I think just to build on one of the topics that someone raised earlier, I think what we're seeing with our clients, and if I'm talking really fast, it's the caffeine, so apologies, but a lot of the flows on instant payments that we're seeing around the world are net new, right? These are types of payments that you couldn't support, or business models that you couldn't support using legacy infrastructure. So 1099 payments, gig economy payments. If you've ever been in a rideshare company or a rideshare experience and the driver wants to get paid out for your ride right when you get out of the car, they're hitting a button on their app and they're getting paid in real time. Those business models were not the types of experiences that were enabled under legacy payment rails. So a lot of the drivers being enabled by competition and technology, I think are really helping drive what we talk a lot about with clients, which is this move from batch to real time. I think we touched a little bit on the growth of instant payments around the world in some of the earlier sessions, but just a little bit of the history and the trajectory. The 70 countries that have instant payment schemes live, it may be closer to 80 at this point. But I think the interesting statistic is those countries represent about 90% of the world's GDP. So instant payments are not a nice to have. I think as Cheryl talked about, this is a table stakes for banks. It's also becoming a table stakes type of a conversation for many corporate treasurers, depending on the segment of the economy that they operate in. We talked a lot about PIX, which is, I think one of the huge kind of growth stories, UPI in India, as well as PromptPay in Thailand. The trajectory often that we've seen in many of these markets is they start with P2P, person-to-person payments. They evolve to businesses doing payouts, and then very quickly they evolve to collections flows, to businesses collecting funds or receiving payments from their customers. And I think that's really the story in many of these markets. The overlay capabilities that I think were referred to earlier, things like QR codes, which I'll touch on, huge growth in these markets. And I was looking at some of the data in Brazil in particular. I think 20% of the consumer to business payments today, in relatively recent growth, are on PIX, right? Which is pretty amazing. UPI, similar growth story. It's massive volumes driven by not only regulatory considerations, so regulators forcing, if you will, banks to participate in order to keep their banking licenses in these markets, but as importantly, capabilities that make the user experience, that make the usability of the payment rails much more viable. US is a different story, right? Obviously, no regulatory mandate, very early days, but there is no shortage of mechanisms, whether they're bank rails, whether they're directories, whether they're the legacy ACH rails, card rails, or fintechs, a lot of whom are leveraging user experience to kind of create the impression of real-time money movement, but the money actually settles, over legacy payment rails. A lot of this fragmentation is causing some of the use cases that we're all excited about, that I'm supposed to be talking about, like request for pay, to take longer to get to market than they need to be. But that's going to change. That's going to change very soon. What is happening in the US, obviously the clearinghouse, as we heard, 7 years old, 6 years in market. FedNow, 6 months old, almost 5 months old. Happy birthday. They both have concepts called request for pay. The ability to deliver essentially a request for a payment, in many cases from a business to a consumer, and then the authentication process of that consumer viewing that request for pay and sending the money back. There's a huge interest, a huge opportunity in this market. I think on the left-hand side, you see some of the data on legacy kind of payment systems. Bank transfers are a material form of payment in consumer bill pay today. Small portion of the e-commerce market, but there's a huge amount of upside and ramp. Zelle, obviously a directory leveraging alias-based payment and alias-based routing. They're doing a proof of concept on their own for request for pay. So the market demand is there. The interest is there. What we need is some use cases and some interest from banks to participate. What I thought I'd put on the page, and I think Cheryl just touched on this a little bit, but these are some of the use cases that are driving a lot of the volume, particularly in the US, but also around the world today. You'll see a predominance of kind of business to consumer type flows, gig economy payouts, true B2B payments, not quite there yet. The transaction sizes in many of the payment networks, including the clearinghouse RTP scheme and FedNow, are really too low to support massive B2B volumes. But as those thresholds grow, they'll continue to grow in terms of B2B adoption. The instant pay-ins. So this is the other side of the equation. And what I tried to kind of articulate is starting from the kind of most achievable down to the more complex. So consumer bill pay, as I talked about, really replacing a direct debit with a request for pay message. You get synergies with kind of digital invoicing and the payment being connected. Last minute payments, the ability to be on the phone as a customer service representative, someone who's about to have their service cut off, sending them a request for pay message, being able to take that payment very quickly. Account to account funding. So I think the example that Cheryl may have given about the company making $50 million a year, maybe a company that's doing wallet type payments. How do you get money into your wallet really quickly? How do you get your money out of your wallet very quickly? How do you get your money between your bank and your brokerage account very efficiently? These are all use cases that are, very proximate in terms of the clearinghouse and FedNow. B2B invoicing on the page. I think this is really primarily small businesses that are starting to use request for pay in the US, but very early. Big businesses, as we talked about, have a little bit more of a dependency on ERP integration and the transaction limit going up. But these are probably the use cases that I think in the US are going to, consume the participants in the payment schemes today. On the bottom, you see some of the use cases that are really starting to take hold around the world. Recurring subscriptions, your Netflix subscription, your Spotify subscription, being able to transact online, whether it's on Amazon or the equivalent in other geographies, and even at physical point of sale. Markets in Asia are seeing a big growth in these areas. The opportunity is here. I think we just have to kind of figure out as an industry how we're going to prioritize these. But this is where I think the growth in request for pay will come. Some of the enablers that we need to get there, request for pay, as we talked about, this is kind of the baseline function, a bank sending using the bank account number, a request for pay to a consumer or a small business, and being able to respond to that request for pay in their banking app or in their digital banking experience, kind of a baseline account-driven capability. But where you really start to see some of the, the drivers of growth is QR codes. We talked about this earlier, simplifying the experience, not requiring the bank account to be captured, making it easier for someone just to scan, their phone over a QR code and then have the payment routed. Recurrent requests for pay. This is a really interesting concept. I know the clearinghouse has been talking about this for a while, but how do you kind of pre-authorize a request for pay message so someone doesn't actually have to authenticate each request for pay message that comes into their bank account? That enables some of those subscription use cases and creates the possibility for e-commerce flows. And Amazon, Wish.com, and Uber, they don't want you to leave the experience of the app to have to authenticate a payment. They want you to stay in their experience. This is a vehicle that allows you to do that. In some markets, there's a concept similar called instant direct debit. There's no obviously direct debit in the U.S. That's instant today, but these kind of concepts where you're capturing a mandate and pre-authorizing, a big enabler of growth. And then things like open banking, again, where you're taking that existing credential that the consumer has and leveraging it to make a payment rather than having them to authenticate or enter payment details into a site. These are all, I think, enablers that will really help requests for pay and the use of instant payments for receivables start to grow. Some of the benefits pretty obvious. I mean, the money comes in faster. That's really a huge benefit for the merchant or the biller. But it reduces a lot of the friction in the customer experience. A huge driver, I think, of what many consumers look for when they're making a payment. One of the reasons that credit card is so easy to use in the U.S. And then acceptance, right? So, the other part of my job is working to help our e-commerce merchants drive payment acceptance around the world. Many of these merchants are looking for offering the relevant payment methods in the geographies where they're collecting money. Having that toolkit available allows that acceptance to increase. And then on the reconciliation side, many of these requests for pay messages around the world are tied seamlessly through the same ID to the payment that comes back. So reconciliation is automated, something that a direct debit experience sometimes creates some challenges with. So those are some of the basic, I would say, themes around requests for pay. So what are the implications for treasurers? I think we talked a lot about the challenges. At the Levio presentation was really interesting. Some of the questions that came up on those slides were the same questions that we deal with corporate treasurers and private organizations that are looking to implement instant payments. But being able to receive money around the clock, a huge driver, right, for sort of consumer-oriented payments, as is the ability to have instant access to those funds. That really drives, from a treasury's perspective, the middle box. You have improved cash management. The cash flow is really important, but the visibility into that cash, knowing when money is going to come into your account, the certainty of that, being able to see the outflows in real time and knowing that the money is moved. That visibility really is a huge driver of what many of the companies that are using instant payments that we deal with are looking for from a treasury perspective. I would say most of the interest from companies right now in the U.S. is really more around the far right-hand side, meeting growing demand, serving customers, creating this customer experience. And then the middle, which is really interesting, is these cost efficiencies. And I know we often look at requests for pay as a potential takeout for debit cards or credit cards. I think that's going to take a while in the U.S. How many people purchased an airline ticket using, reward points or got cash back? That interchange funds a lot of benefits to the consumer that merchants have to think about on Unravel. But if you take, that transaction processing fee kind of reduction out of the mix, you look at the operating efficiencies that are created, the servicing benefits. I think what we see a lot of is the ability to use the real-time data that's associated with instant payment and build better informational experiences for customers, reduces calls into help desks and things of that nature. It's a very powerful driver when you look at the end-to-end benefits of instant payments. So just kind of summarizing that the momentum is really growing. I think I hit on a lot of these themes and the opportunity, but really what we're spending a lot of time talking to treasuries about is how does real-time payments fit into a broader theme around real-time treasury. So if you think about real-time payments as one leg of a kind of a three-part journey, the ability to send money and receive money in a much faster time, that is part of the story. The other is, syncing up systems internally and with third parties so that you have better information, right? Being able to build better visibility into when accounts payable is resolved, accounts receivable is going to be resolved, and then how does that all tie into real-time liquidity? So knowing with greater certainty that you have money in certain accounts, how do you leverage that more efficiently? So many of the clients that we do business with, have 10, dozens or hundreds, sometimes even thousands of bank accounts. Being able to have that real-time visibility and make maximum use of that liquidity, huge part of the corporate treasurer's job. But as we talked about earlier, being able to do some of these things requires, kind of synchronizing the organization, building the right technology and the right processes to enable all of this. The last slide I'll leave you with is just some thoughts, a survey that we did, we do regularly through our kind of a client advisory practice. This was done in June. Global in nature, probably skews a little bit towards large organizations, but very broad-based in terms of industry. So there was a lot of questions around how are they preparing for this move to real-time treasury? What are the concerns? And not surprisingly, a lot of the focus was really around challenges with systems and challenges with organizations, as we talked about earlier, making sure that the organization was staffed and able to support real-time payments. I thought was interesting is where is the area of focus right now? Not the right answer for a conference on real-time payments, but the primary focus was not real-time payments. It was much more focused on real-time information. I think this trend is really skewed a little bit more by the fact that most of the organizations who are participating in the survey are mostly B2B companies. If you ask a company, like that doing, 50 million instant payments, a year, companies that are using this as part of their core business, digital platform companies, you might see a different result. But most of the companies are seeing only a fragment of their payments either coming in or going out in the B2B world as real time. So real time information, kind of a priority. I would suspect this will change, as the transaction limits and the uses grow. The middle chart really talks about, the challenges. And, you see some of the things I referenced earlier, staffing, the lack of understanding of benefits, which I think was interesting within the organization. But the big one was around making sure that treasury management systems are available and able to consume information in real time. And then the last, and not surprising, given the size of the companies, a little bit more traditional companies, they don't want to be leaders, early adopters in this. They mostly want to be fast followers. And so the theme around education and continuing to make the business case, that is a huge part of how I spend my time talking to clients. So I ran through that pretty quickly, but I think it tells an interesting story about how Treasury views some of these capabilities. The opportunity is there. Super enthusiastic about what we're seeing from the FedNow team and from RTP. Happy to answer questions or field any comments. Yes. That's the story. I think a lot of Thank you for that. Appreciate the comment. Yeah, and I think, again, this is a treasury view. The view of this perspective will be very different if you're talking to a line of business, if you're talking to an accounts payable group, you're talking to an accounts receivable group.
You have a real quick question?
Yeah.
Again, which is very helpful from your perspective, from a corporate that's involved or wasn't involved in not the conversation. It's like the data is one thing, but actually involved in it with your whole set of mistakes.
So this is the corporate talking, right? This is the Treasury organization within the corporate telling us this information. But I think, as I was mentioning, like this is a particularly Treasury-oriented view. If you're talking to a line of business, like a platform company, digital platform company that wants to use instant payments, they're trying to figure out how do they embed this into their ecosystem, right? How do they take friction out of their payment experience? How do they leverage the real-time nature, not just of the money movement, but the data associated with the payment, and how do they build better user experiences with that, right? So the Uberization, right, of payments where you don't even know you're paying because it's kind of behind the scenes, that frictionless, that is what they're trying to figure out how do they use this, but very different considerations than the Treasury. Yeah.
One more urgent question. No, that's not him.
You're talking about on the up on this slide. Well, I mean, it depends on what you're comparing it to, right? I mean, I think a couple dimensions to look at, right? So one is actually what is the pure transaction cost, right? Instant payments is definitely not cheaper than ACH. It may not be cheaper than debit cards in the near term. It's cheaper than credit cards. So if you're looking at that level, that's one consideration. I think what we spend a lot of time talking about is particularly around request for pay is, are you looking at just the cost versus an ACH, or are you looking at the end-to-end cost of what it's really costing you to collect from that customer, to bill them, if you're getting paid by a check, all of the associated costs with that, what's the end-to-end view? And that's where some of the operational efficiencies and sort of the ancillary costs come into the conversation. But this is, so when you say are costs really coming down, it depends on what lens and who you're talking to. I think there's a huge opportunity to drive operational efficiencies that may not translate at that level, but in a much bigger picture, right, for an operational team or a servicing team. That's a great question.
Great. Thank you so much, Chris. That's very interesting.